morning, everybody. Happy Monday, Tim. And we
Hey
have
there, Fred.
a guest here, Paul Heffernan, PJH. He's been on before, a friend of mine from the pits in Chicago from many years back. There's the badge. There's the badge. As Paul said, he brings props to the table. So there you go. Good stuff. How you doing this morning, Paul?
Very good. How are you guys? Everybody good?
Everybody's good. Everybody's good. So we got an interesting Monday. Big moves in gold, big moves back up in bonds. Questions about the dollar. We have a new Treasury Secretary designate, I guess you would call him. What are your thoughts, Tim?
Well, I think we're at a point, and it's funny, that we got Paul here today. I've always looked at these markets as you're either in a trading environment or an investing environment. And we've lived, all of us, in the trading environment, you're looking at the crowd, everybody's in for short term gains, positions less than, a couple of days to a week or 15 minutes. But sometimes the investors step in and take hold. And I think we're in one of those environments right now where we're going from trading positions to investment positions.
Mm-hmm.
Do you agree, Paul?
Yeah, yeah, yeah. The change in from Trump winning, people are making their longer term bets now. So instead of this day to day huge volatility that we've had over the last say 6 months till the election, now okay, they got their candidate, and they're going to make their bets on longer term on what they see the future being.
So you
Yeah.
got to shift your chart from some sort of daily or 15-minute or hourly chart to weekly or longer term,
Yeah.
and the resistance levels and support levels are different than they were.
Yeah. I mean, without a doubt, we're going from 15-minute charts to the dailies and the weeklies, seeing where, we talked the other day about where's the focus. I think the focus has changed again. Russia's still in a big picture in terms of geopolitical space. But now let's look at who this Treasury Secretary is and what he brings to the table and what his background is and where he's going. So the focus once again changes. It always does. But longer term, I think you got to be bullish longer term. I just think, my opinion's still the same that in the shorter term, and when I say shorter term, I think over the next 3 months, 6 months, we're going to have a bumpy ride.
Yeah, I would agree with that.
There's too much euphoria right now. As I said to Tim the other day, I said we've talked about kicking the can down the road, and when we finally solve this debt and deficit problem, it's going to be pain to feel. And these guys are really talking hard about just solving that problem. So I think we're going to have pain to feel initially.
Yeah,
I mean, a good analogy here is we're renovating a house and we're knocking down walls and changing the plumbing and this dust and ugliness that's going to be here for a while. And it's tough to live in that environment for a while, but in the end, hopefully, you got a good long term solution. So we
Right.
got short term problems and long term solutions, I guess.
Right. Right. Paul, last week Tim and I were talking about sectors. Do you have any sectors that you look at in terms of the market or things that jump out at you? I know the last time we spoke, you were talking about your option strategies.
yeah. So I did okay last week with that, and so I subscribed to this one guy, and every Friday at 2:40 he puts on an option for the next Friday. So the last 3 weeks he's bought in puts, and he's lost everything the last 2 weeks. But I kind of tweak it in that I'll trade it during the week. So if we have a giant up, I'll I'll add to it, and then on a retracement, try and finance the position. Uh,
So you trade more of the delta?
yeah, because it's just the I was a pit trader and I used to trade 5,000 cars a day, and now with this algorithms going faster than a millionth of a second, it's so fast, and you just can't do it. By the time you go, and you go to reach for the mouse, like, well, it's already gone, So you have to have your orders in, but when you have them in, then you can get run over so fast. It's just crazy. So the options give you time.
You,
You
you,
can you
you
can
talk
get in.
about the
It can go 100 handles against you, and oh, here my dog knows how to open the door. Okay, Violet, get out of
you,
here.
you talk you talk about the milliseconds.
Yeah,
Our old friend Anthony and I were working together one time, and we were talking with some liquidity providers, and we're talking about latency.
yeah,
And if you had a 50 millisecond, 100 millisecond execution between when the guy pressed the button and he got filled, that was a problem. These guys got all bent out of shape because they're managing microseconds. So one time we got a latency report and it was like 600 milliseconds. And Anthony said to me, "Boy, I'd hate to be hanging from a rope for 600 milliseconds." You can be okay. I think you survive. You take things out of context, you lose your focus.
yeah.
But go on. I'm sorry.
Uh, yeah. So I'm still trading mostly.
You're still looking short term, week to week, then, and you're picking your spots.
Yeah, yeah, and then I still trade a lot of hogs, which is more of a spreaders market, but it's the same thing. It does nothing, and then boom, it does something in 2 seconds. Or the S&Ps last week, uh, they were they never go down like the first time the flush. So you're like, okay, don't do it, don't do it, and then the one day you're gonna do it, you go, okay, wait for the bounce, and then there's no bounce, and it just goes straight down.
Right.
So I think the options just give you a much steadier, easier, and you're not so jittery, and you're like, oh yeah, what's shit, So it's just a little bit calming, and you can survive a little bit longer.
One time a friend of mine asked me to go out to Cleveland to interview for a job. So I met his boss, and his boss came out of a sales background. It's one of those things where they put a salesman in charge of the trading room. And I was talking to this guy, and the more I talked to him, I got the feeling the less he really understood what I was saying. So he asked me about, philosophy. How do you approach these markets? And I was trading. It was a currency desk. So I said, by and large, these markets these days are efficiently priced. But you run into periods, maybe 3, 4 times a year, where the pricing gets inefficient. And those are the times that you load the boat. Other times you're sort of pissing around just trying to find out where you are and looking for that environment. And this guy's eyes just glazed over, and I thought, he has no idea what I'm saying. This is really not a good fit. And he turned out to say to the guy who was trying to get me in there, Jeff, he said to him, you don't write enough tickets. And he looked at me and said, well, what's the right amount? It struck me that this was the salesman's mentality. Every time you write a ticket, you get the spread, but he had no idea about risk or managing risk, and I think sometimes these markets get populated with those guys. So I don't know how
Volume
that.
equals profit. Yeah.
Yeah. So we're in one of those times where, you could look at this. I chose to load the boat on drillers. Freddie and I have talked about this. Oil drillers and natural gas carriers. I think that's the safest bet on the board.
Yeah,
You usually look at the market and you say, there's 4 reasons to buy it and 1 or 2 reasons to sell it. But I really haven't found a reason to sell it. It may go down with oil and natural gas as supply goes up, and that I don't think fundamentally that's a weakness for drillers and carriers. So that's where I think they're inefficiently priced at the moment.
yeah, and I think Trump's going to lift that export ban on LNG, and we start selling LNG to Europe. That could really support the price of the natural gas. So I think that's a good safe bet.
I read an article this morning that I wanted to raise with you guys. It was about Europe. For some reason, I woke up at 5 o'clock in the morning. I got hungry, and I never really got back to sleep. So I started reading, and I saw an article about Western Europe and what kind of shape they're in, and how they should be adjusting to a Trump era. And it just occurred to me that Germany has really fallen apart since the Greens got powerful there, and it lost all of its motivation. And they're at war, and they don't know what the hell to do about it. You know, they got war right on their borders. So, if you're thinking about the dollar and investment, you know, you got to look at Europe and say, how are they going to respond to this thing? So you ought to,
Yeah,
of
Europe's
course,
a
think a
sale.
lot.
The euro is a sale, but the question is against what and in what time frame. I think
Yeah.
longer term, until they get their act together, you know, the U.S. has been dealing with this, the woke agenda and everything associated with it, and natural immigration and growing the country. Europe, we're following a European path. And I think with the later results of the last election, we're changing our tune a little bit and focusing, becoming more America centric. Europe hasn't done that yet. So
No,
there's
they're
going to be
still
an
woke.
adjustment period. Yeah. Yeah.
Yeah.
As you say, the Green Party, you know, shutting down all of the nuclear facilities. But I think France, either France or Germany, had started up some nuclear facilities again because of the energy issues that they were having.
Yeah.
The
Well,
key
this whole
difference,
AI thing is going to take a ton more energy. So, the energy is going to be the key. You can't have AI without a huge electric grid because it takes so much power for all that computing power to work.
And they're
So,
not doing it through windmills.
no,
you know, but
the wind
maybe
stops blowing.
maybe we're looking at this and not recognizing. I mean, the key difference between America and Europe is the public woke up in America, and I don't think they woke up in Europe. I mean, this election says that the public is behind the anti-woke movement, if you will, and and that's not so in Europe. I mean, the
I
public is
don't know
still
about
very
that.
much.
I don't know. You go through Italy, and I was there in May, and it's they're a little frustrated with everything that's gone on. London
Has it
is
shown in
overrun.
any of their elections?
Yeah, I think the prime minister has changed focus. I forget her name. It was a woman. She was supportive of Trump. One of the earliest congratulatory phone calls, I believe.
Maybe that's the play. Maybe the idea is to look for woke countries versus countries that have non-woke. Argentina's not woke anymore. Hungary's
Right,
not woke. There might be some opportunities to play that. What do you think,
right.
Paul?
Yeah, yeah. I'm just looking at this gold down $80 now. It's just amazing. Like I would think, like you can't. It was down $60 earlier today,
Mm.
and I'm like, well, you can't sell it. And then I got this little thing that I follow, and it was like sell, so I sold it, and I was down 80. Yeah, I think I don't know. I'm a frustrated pit trader, so. I was never a great investor, so it's kind of funny. Like we're talking about investing versus trading, and my trading has because we've gone to milliseconds on all these algorithms and platforms. I'm in a frustrated position. Um, but yeah, you could look at countries that are waking up and are they going to make changes and put some dollars to work there for sure.
So, just want to go back to the point that you made a minute ago. You're a frustrated pit trader, and you're more of a trader than an investor. Is that even in your personal account, your longer
Well,
term
yeah,
account?
no, I was horrible. You know me, Fred. Show me a penny stock, and I'll put everything I have in it.
We're here for a good time, not a long time.
Yeah.
Famous quote.
So, yeah. No, I was a great money maker and a horrible investor.
Right.
So, so um,
couple of restaurants, if I
For,
remember correctly. So,
for all your clientele out there, just ask me a question and then just fade me, and you will make nothing but money.
We had a great friend, and I drank a bottle of scotch with him, and we came up with a theory one time, and I ended up writing a book about it, about the phases of people as they go through careers. I won't go into it now, but from that conversation, I made a sign that I hung in the trading room that I ran. Because I'd hire somebody and they'd say, "What do you think?" And I'd say, "Read the sign," and the sign would say, "Panic when everybody else panics, but try not to panic last. If you find footsteps on your face, get up and follow them." And we can't afford to be right in the long run. And that third one is the one. That's the bitch because,
Yeah.
the unemployment line was loaded with people who said, if I would have waited another 3 months, that position, yeah, well, you were blown away long before that. And I think we're in that kind of environment where the footsteps are running over the traders right now. Gold
Yeah.
is a great example. And maybe the market's saying, inflation's dead. We got a Treasury Secretary here, and we got the Doge group, and they're going to put this away. So all these yield curve trades you've been putting on all these months and riding these rallies, that might be over. We're,
and
we're
if
at a
he's going
turning
to end
point.
wars too, if he's going to do what he can, if Israel and Hamas are coming to the table, and if he can get Ukraine and Russia to come to the table, maybe it is the beginning of the end of the gold trade.
Yeah.
Or they're redeploying gold assets and putting them into Bitcoin,
Yeah,
which, by the way, is down today too.
Yeah.
yeah,
Although Ethereum is up big, like 3% or something like that.
yeah. Do you do any of that? You do any of the digital stuff, Paul?
Uh, yeah. I just got out last week, uh, and I mean, Bitcoin was at like 93 or something, so I didn't. But I only have a little bit of Bitcoin and a little bit of Ethereum. Most of the rest was in smaller ones. I did okay on them. So I just thought, wow, geez, had a heck of a run here. Let me take a little and wait for a pullback. Um, so, it's interesting. I got an article yesterday. Somebody sent me on this stock. I think it's called Minister.
MSTR.
Yeah. And so, do you know what their trading strategy is? They they lend money out, and then they take the money and buy Bitcoin, and they like
And
right
this is
now,
Saylor, right? Saylor is the guy, I believe, that runs the fund.
Your mic is out, Paul.
Your mic just went out. Go on.
a buddy just called me. I'm sorry.
Yeah.
So they sell zero coupon bonds, and you don't get paid unless the stock rallies. Like I don't know. I think the stock is like I don't even know where it is. Like 500, and they're selling like 650. So it's almost like an option, but it's you have 4 years on the option versus. So if you think in option terms, the furthest you could go out on the stock would be 2 years, and the option prices are so ridiculous that you're better off doing this where you're lending them the money. But to me, it seems like a Ponzi scheme because at some point, like it's been awesome so far because it's gone from
But
I don't know
but
when
that
they
guy did blow up a couple of times. I mean, if it's the guy I'm thinking of, Saylor, I
yeah
believe, Saylor.
yeah
I think he's the fund manager, and he blew up when Bitcoin went from 60 down to 20.
yeah
That was a rough ride for a lot of people that were invested in
yeah
MSTR,
yeah
and now it's back in the game. So,
yeah. So I think that's kind of a. It just seems like a like it's a Ponzi scheme, but at so far it's been pretty good.
it's
Uh,
always good when the market's going in the
yeah,
right direction,
yeah,
you know?
but it's kind of like what we talked about last time a little bit is that there's 20 trillion new dollars in the system in the last 10 years, and so the government owes that 20 trillion, but somebody gets a hold of that $20 trillion. It's printed into existence, and so it might be. Where else are you going to put your money? The stock market. And I think I said that during the Weimar Republic, the stock market went up. It had wild swings, but the prices of things. If there's 20 trillion new dollars, the prices of things have to go higher because there's just way too much money in there.
Yeah, it's not just stocks. It's real estate. It's cars. It's
It's
art.
yeah,
It's everything. Yeah,
yeah,
that's the
Well, if you
definition of
believe in
inflation.
Doge, though, we're talking about disinflation.
Right.
yeah.
This economy has been propelled for the last 40 years. I saw some statistics from 1984 to now. GDP has gone up 10 times, and inflation's gone up like 40 times or something. Maybe it wasn't inflation. I don't know. I'd have to look at this again. But the money supply has exploded, to your point. And we've lived off an injection of money. And what they're really talking about is a disinjection of money. We're talking about draining the money supply here, shrinking the Fed balance sheet, at least relative to GDP anyway, even if not in absolute terms. And that's disinflationary and depressionist.
Yeah, that's the tough times that we're going to face initially.
Yeah.
Yeah. That's the
You
article
want
I
to
was
get back
reading.
to where money matters, and maybe that's what gold is telling you today, that the market's starting to look at a time when money's starting to preserve some value, and inflation's not going to run it away.
Yeah. Yeah, we're getting close. That's for sure.
Paul, when did you start in the markets?
I started in the fall of '82,
Okay.
and I started out as just a phone clerk on the Merck. Well,
Working
first I
from
started
morning leaving.
in the office, and so on the floor, they didn't have any screens with the spot prices, and so I was on a phone with a guy from the Canadian pit and a guy from the Deutschmark pit, and they were arbitraging the futures to the cash market, and so I was quoting currency prices, spot Canada and spot Deutschmark. And then these guys would, you do your forwards every day and your interpolation, and okay, where should it be? And then when it would get out of line, they would sell or buy, and then get a. We had a big line. Levy had a big line of credit with First Chicago and Royal Bank of Canada and a couple other places, and so they would put on the futures to cash, and then wait for an opportunity later to take it off. So I was quoting currency prices. Then I went down on the floor and became the clerk, arbing into the pit, and then they stopped doing that, and we just started filling, and that's when I started working with Freddie and Anthony, and they were doing the same thing, arbing the cash market to the futures market.
So the Class A and Class B years.
Yeah, so I started on the Class B side, and then when these guys started doing it, so it was very, very interesting times, and the market was so much more. How do you want to say? I remember quoting the Deutschmark: 4.5, 4.5, 4.5, 4.5, 4.5, 5.5, 5.3, 5.6, 5.6, and
That's right.
and now the market's moving so fast you can't even quote it.
Right.
Well, I was at a small bank as a currency trader in 1969, and we still had Bretton Woods. And
Yeah,
I became a broker the day that the gold window was closed.
yeah,
So Swiss francs moved like 4 cents that day.
yeah,
Yeah, like 400 points. The spread between the bid ask was, I mean, Swiss moved 25% that day.
Yeah.
And the spread between the bid ask was like cents. So, I mean, the markets you're talking about seems like early days. To me, they were mature markets based on what I had seen, you
Yeah.
know.
Oh
So
yeah.
now I look at the kind of liquidity that's out there now that's floating around in milliseconds. I mean, I don't know if any of you guys remember or were involved when Herstad blew up. Do you remember that? A.G.
I
Herstad?
remember Herstad blowing up, but it was, I guess it, was it late 70s?
Mid 70s, like
Mid
74,
70s.
I'm going to say.
Okay.
I was a broker, and the day before Herstad, you'd get a price. You know, somebody like Credit Lyonnais would
Herstad
say,
was a bank in Germany. It was
yeah,
a
it was a
small
private
to
bank.
mid-sized
And what
bank.
these
Yeah,
guys
private.
did was they bought dollars and they took advantage of the daylight risk. In other words, the marks came in, and when they had to pay out the dollars, they didn't pay out the dollars. They just closed the bank. They kept the marks and they closed the bank. The day before, the week before that happened, a bank like Credit Lyonnais would call up me as a broker and say, "Give me a price for 10 million francs," which was about $2 or $3 back then, and that was a fair amount. You know, they traded on 5 francs, which is $10. And I would call somebody like Morgan Guarantee, and I would say, "I have a large French bank. What's the price?" And he'd say, "All right, for 10 francs, I'll deal you 20, 30." And that's the way we'd go. Well, after Herstad, Credit Lyonnais called me up, which was at the time the second largest bank in France, and said, "Look, I want a price for 10 francs." So I went to Morgan Guarantee, and the head trader was a guy named Bob Van Roten. He was an old timer in my eyes, and he got on the phone, not the French franc trader, but the head trader. Got on the phone and he said, "Have their account relationship people call our account relationship people, and we'll see what we can do to accommodate them." And a day earlier, it would have been 10:20. You know, so liquidity ground to a halt. And if you had a position, a significant position, there was no way you were going to get out of that. I
Yeah.
mean, it would take you a week to get out of something that took you 15 seconds to get out of a day earlier.
Yeah.
And, I never forgot that. And I've lived in fear of that level of market access or liquidity drying up, you know? And when you see volatile moves and you see a big player go to the woodshed, some of the kind of stuff we saw during the crash in '08, where big names blew up, or even the crash in '87, I'm sure you guys remember.
Yeah.
You see liquidity just dry up, and these positions are massive, and they're in what we consider strong hands. But you get big positions in strong hands that become weak hands because they can't get out of the positions, and the positions dominate the institution. You know,
Yeah.
I always wondered whether or not that's not that far away, but I guess after looking at it for 20, 30 years and saying, yeah, we're still around. The closest thing that happened to that was '08.
Yeah, well, we did have, during COVID, we had some minor crashes that went on as well, that it ground some industries, made it very difficult to get in and out of certain industries. But you talk about where we've come from and where we've been. When I had Steve on a couple of weeks ago, he was the e-trading global risk manager for J.P. Morgan. He started in, it's got to be close to 20 years ago. $50 million a day they were doing electronically. When he left, they were doing over $200 billion a day electronically. So think about the magnitude of size.
Yeah.
JP Morgan clearly is one of the biggest players. This is an FX. But you take that technology and move it across all different asset classes. Is it a hedge fund that could blow up? I mean, I think the banks are offsetting these risks to a number of different people, but somebody's holding it. Somebody's holding it at the end of the day.
Yeah.
There are definitely deep pockets out there, and I don't know where it's going to go.
We take for granted this access, this level of liquidity access, and we really don't think about it. But you're trading from your rec room, and you got positions that are bigger than the banks I used to trade for 30 years ago.
Yeah.
Yeah, so true. All right, guys. Anything else to say, or I guess we could wrap it up and try it again another day.
Yeah. Uh,
Sounds good to me. I got an appointment with a tea time.
Oh, nice for you.
keep
Little
your head
chilly.
down.
In
As,
the markets or on the golf course?
Hey, both of them.
as
All
Dave
right. Good to
Harbison
talk to you,
used to say.
Paul, Freddie.
I don't know if you remember Dave Harbison. He used to work with me at Manhattan. Great guy, great golfer. And one time I was playing golf with him and I scolded. And I said, Dave, what am I doing wrong? He's all right. Hit another one. I put the ball down and I scolded again. I see your problem. You're standing too close to the ball after you hit it. So, thanks, Dave. All right. On that note, thanks, guys. It was great having you on, and have a happy Thanksgiving, everyone.
Take care.
God
Bye
bless you.
bye.
Happy
Cheers.
Thanksgiving, everyone.
Bye, you too.